All right. So again, I'd misplaced my slide deck. Miss Robbins sent me the copy of the disclaimer for tier three. That's fine. I'm going to run through it. It is tier four. We'll get it arranged between the two of us and get a slide deck and everything set up. We're going to be doing some training sessions and special recording sessions over the next weekend in preparation for some things that we're rolling out for the quarter. Uh, I played two pullbacks. I'm out of both of the pullbacks on consensus and the test of a double top. So we'll look at the chart after we run through the disclaimer. The past performance of any trading system or methodology is not necessarily indicative of future results. The system methodology we're focused on, CSA or comparative strength analysis in 5 easy steps, CSA5steps.com, where you can go to get registered for the academy. Do a one-on-one with me, see where you best fit in, and determine whether you want to be a student, a client, or both. So all of the tools that we use inside of the Academy, including the TIG, EA, script, algorithms, and bots, the third-party software from purposetrader.com, TradingView for the charts and markups, are all covered under that disclaimer. Live or recorded, all information is for educational purposes only. Shifting and going back over to our current chart, getting ready to break out through a double, triple top. Was able to catch a retrace and play right here and a retrace play add 5 right here. Consensus was on the pullback that we did not come down here and test, as if we didn't come down and test, do a hard test of this floor right here, that I would go long, and that's what we ended up doing. So now as we've pushed, what are we, 3 trades in, I think? 4 trades in. So 4 trades in, we have a combination of about 1,200 per, 12,000 on the fund. That 12,000, why would I need the $10,000 a day on the fund?
1% of the big fund.
1% of the $1 million, right, that we put together as a group of client students. And so now that that has doubled, what do we need that to be?
20,000.
20,000 a day. And so the two ways to go about doing that would be what? I guess maybe more than two, depending on how creative you are with your answers. Don't lose money. That would be one, but that's not one I was thinking of. What are the two primary ways that we can double the take per day?
Add more accounts.
I can add more accounts. Okay.
Add more trades.
Add more trades. Okay. Those are good. Those are good. Could I increase my lot size? That's probably going to be the desired method. Because if I'm confident in my levels, if I'm confident in my entries, if I'm confident in my risk management strategy, then I would be confident to increase my lot size.
Yeah.
More so, in my personal opinion, than increasing the number of trades. Because the more trades that I pursue, I tend to start forcing a trade because I need 4 trades. I need 8 trades. And I start taking, well, that's not really as good as I would normally look for, but it's close enough. And then I start compromising now when I actually do my best, Miss Rena, are you on here? I didn't check the participant.
Yes, I am.
You are. Okay. Um, when you were with the executive team, what were we doing right next to the computer?
Trading.
We
Oh,
were
right next to the
trading,
computer.
we were talking, and we were playing what game?
Skip bow.
Skippo. Are you a Skippo like Grandmaster?
Yes, I am.
You sure are. Had you played Skippo before coming down there?
No, I had not.
Yeah, me neither. It was something that my grandkids introduced me to over the break. And so I ended up anytime I can see a game and make a trading analogy or a learning opportunity out of it, that's what I do. And so I ended up adapting the rules for Skippo into the rules of a trader. And so I'm going to go over those at some point, not today, not right now. But the longer we played Skippo, and I'm sitting right next to my computer, where all I have to do is glance over the screen periodically between hands and see if there's a pattern setting up.
Yep, and that's what you did.
And I would trade maybe 15 trades on a day that I would normally only do four. And those trades were very profitable. So we were having $500,000 days for the hedge fund. And so it was a unique opportunity where I'm not normally something that Craig and I discussed. I don't want to be tied to a computer. I would not have sat there that number of hours trading. I would not have done it. We were having such a blast playing Skippo and talking to one another that I was not there trading. That was not the purpose of being there. The purpose of being there was trading and having fun with the executive team. I just happened to be sitting next to a trading terminal. So, good Lord gave me an opportunity to take a trade. I took a trade. So, we will start seeing these numbers because the average, now we're going to have, again, it's an average. Some days are going to be better than that 20,000. Some days are going to be better or worse than that 20,000. Did you see what I did there, Craig? Some days they're going to be better, and some days they're really going to be better. You know, that's a positive attitude. So, if we're going to double the 2 million, then eventually, what are we going to be looking for on that daily return?
20,000.
40,000 a day. It's still going to be a percentage, right? We understand that. It's a percentage. It's that 1%, which is 10,000 per million. So if I double to 4, I need 40,000. If I
Right.
double to 8, I need 80,000 a day. That number is always going to be a percentage, and it's always going to be an average, and it can never be a guarantee when we're discussing it. But when you're in here and you're seeing it day after day after day, it becomes more believable, right? It might have been like when you were first looking at it, could you even make $10,000 a day? Is that even a realistic number? If it were a realistic number, 1% per day, why isn't everybody doing it? It begs that question, doesn't it? If it were that easy, why isn't everybody doing it? Anybody ever dealt with another funds manager somewhere? Was that funds manager giving you anywhere near that? And if not, why not? I just saw, I'm not around the TV much because I don't watch a whole lot of TV. I do like movie night. And I do need to ask a question, Miss Robin. If you have Paramount, and is Paramount something that could be added? Because there's a couple shows on there that I do like that I'm a few episodes behind on. But I was watching a series, and I'm trying to think what the name of the series was. Uh, Not coming to me. It was about Wall Street South. Does that ring a bell with anybody I think it was on Prime. Wall Street South. Does that ring a bell with anybody?
No,
No.
No. It was kind of an interview process. Where would Wall Street South be? Does anybody know?
Texas.
There are locations in Texas. That's not what this particular show was about. It was the migration of 50 different hedge funds that have left New York and moved to Miami.
Mhm.
And so the main reason quoted for doing it is Florida is a no tax state. New York has such extreme taxes. And so they're finding it cheaper and enjoying the weather as much or more by being down in Miami. And this week, for those of you that don't know, it's kind of unofficially become This is Hedge Fund Week in South Florida.
Hmm.
All of the big hedge funds. If you went down there right now, you would see about 20 different super yachts
What
of
part?
the big funds, and they're all part of Aviva. What's Aviva?
Voluntary Employment Benefit Association.
Very good. Voluntary employee, you said employment, but same thing. Voluntary Employee Benefits Association. So anytime you have a yacht, here's one of the rules, is a Fortune 500 company can have a yacht. They could have a jet. They could have a lodge in the Swiss Alps. They could have big ticket items like this as part of the VIBA. And they just have to post it on the employee board. Now, if you were an employee before you came through my class, kind of I don't know, I think I remember him saying something about Aviva, but I'm not real sure off the top of my head what that is. How many people that go by the employee board know what Aviva is?
Wait, very few, I'm sure.
Very few. And how many of the ones that go by the uh, the board that see the VIBA would be willing to spend $1,000 on jet fuel to borrow the company jet?
Fewer still.
Fewer still. But that is the condition. If you want to borrow the company jet, all you have to do is get on the schedule. And between the fuel and paying for the pilot. Now, do I want somebody that's just thinking about being a pilot, piloting the jet the time I decide to rent it?
Oh,
No, I want a good pilot, right? I want a good pilot. And so I don't mind paying that $1,000, but literally at the drop of the hat. If I decided I wanted to go to Dubai this morning, well, it'd be a little late to make it to Dubai for the morning, but I could go to Dubai and have dinner in Dubai for $1,000. So if you're a jet setter, is that reasonable? Right? You're not going to get a commercial flight very many places, first class, last minute. So that is a reasonable deal. Why do I bring up VIBA? Because we brought up in past classes family office. Anybody that's a part of the family can use the jet as long as they reserve it. They can use the yacht as long as they reserve it. And if it's the VIBA that owns it, there's no tax. What? That sounds like a reasonable way to do things. So it's doing business things in a tax wise fashion. Business things in a tax wise fashion. All right, so we're getting ready to pop through here, getting real close to cashing on this one. 1, 2, 3, popping out.
bingo.
Right there. That was a $430, $500 per. Locked in about 449.75 in 3 minutes. Bringing our total to about 16 per, and we're about 14, 15, right at 15,000 in the fund. So we're looking for 20,000. The percentage number here is going to be off a little bit because of the last adjustment we did in the accounts. We did go wider on the accounts. So, think about how the best way to display that. I'll do some math over the weekend, and we'll talk a little bit better about how we're displaying that. It's nothing wrong with the way Robert's displaying it, but it's the number of counts is going to have to be changed from 10x, and I'll have to get the appropriate number from the accountant on what that should be. All right, so time-wise, where are we here? What do we like? About 10 minutes of having yeah, 10 minutes and we'll be at the London Fix. So let me go back over to my other screen. We'll make a couple of adjustments. Screen share. Back over to Trading View. Take our gold, bring it out to full screen. Let me grab my verticals and move them off over here to the side because I need to come up and capture the top of that wick. Right. So we kind of had the channel thing going on this morning. Coming in here. Whoops, I need to be up here. That's how you do it. So with these common points, and we like it when you get one. What in the world? Maybe I need to get my eyes checked.
You think?
I am working on a parallel channel. I have the parallel channel lower. Anybody that knows how to use a parallel channel can tell me what's wrong. You grab a parallel channel, you click 3 times. You click the lower, you go out, you click the next spot, and you expand. It's not doing it. Why?
Refresh the page, maybe. Yeah.
There we go. And then grab it to go to the something when I'm dealing with the screen extender. You'll get in the middle of a function and it tries to grab something else. So it's not a clear signal out there. All right, let me check on something. Give me about 5 minutes. I'll be right back. All right. Did anybody else take part in that run?
I did.
Okay. Now, whether you're two, three trades into the run and you just went from phase four to phase five, does anybody in there trade phase five?
I do sometimes.
Okay. What are you looking for the next setup? What are you looking for?
I'm looking left to see if, and I have difficulties with gold because of the highs, the new highs. But since we've had some higher than where we are now, I'll usually look left for levels. And on the 5 minute, I usually look for a breakout box. I set a breakout box at that level and see if I can get a new candle forming just outside of it.
Okay. Is that enough of a retrace? Or do you need something down closer into the mid range?
No, if I think I'm in a slight small rally, then I'll the retrace would be minimal, slight drawback on the turn of the candle. And if I notice that the candle the candle goes short, slightly short, even though it's formed on the top of the breakout box, then the tendency I've noticed on the 5 minute is that it's going to go long. If it stays down short for a longer period of time, maybe 10, 15 seconds, then the tendency for me is that it's going to go short.
Okay.
That's kind of how
Let
doing
me
things at the
go
moment.
from here back over to here. So I'm looking at this range, this 50% mark, which is down about where we're at right now. So a pull back into the 50% of day, 50% of the IC helper from the high to the low to the high, a pull back to the 50% and a bounce. So I'm looking for a fractal point bounce to get me up above 49, I don't know, 48 and a half. So then I look at the numbers and see, is that enough of a bounce to be a profit? If so, take the trade. If not, I stay out of the trade. I'm in the trade. So took a trade here as we're approaching the 50%, added 5 on that last push lower, could be a fractal point for a bounce, giving me a break even of 49.46 and change. And I need about $2 above that, so I'm looking at 49.4850. So let's mark for, excuse me, 49.4850. Right, that area. Trying to edit. All right, so we're moving into profit, pushing through. Need another 50 cents. And 50 cents cashing out. Grabbed about 318 per. So as we look at coming up on the end of January, as we look at going into February, some of the things that we're going to be doing in Tier 4. If you do not have a Think or Swim account, that is the software we will be using in class. Thinkorswim, which is now Schwab, but the Thinkorswim account. And there is a day trade rule that if you have less than 25,000 in the account, then you can only do 3 day trade style in and out in the day option trades, or they will block your account. So the way we deal with that, because we do trade Monday, Wednesday, and Friday, if you don't do any live trade practice outside of class, you could take a day trade on Monday. You could take a day trade on Wednesday. You can take a day trade on Friday. By the time you get to Monday, that day trade has fallen off, and you can take a day trade on Monday. You still have 3 inside of 5 business days. So then by the time you get to Wednesday, the one from the previous week has fallen off. By the time you get to Friday, the one from the previous week has fallen off. Now, here's the problem. Occasionally, we will get in a situation where we have to, just like we would dollar cost average, we have to add to our position midweek. Therefore, it throws off your day trade count if you, again, are in an account less than 25,000. I don't make those rules. Those are rules given by the brokerage. Okay. And so, as an active trader with 25,000 in your account, you don't have to worry about the day trade rule. Therefore, you can do as many of the trades as your account size will allow. So that would depend on the size of the trade. So we're going to get into some of the hedging concepts, and we are going to get into some of our daily option trade for profit. Profit and protection are the 2 things we use our options account for. This is Tier 4. Tier 4 is a derivatives trading class. So we're going to start showing how we build the safety net. We're going to start showing how you can protect a portfolio. And we're going to be using Thinkorswim because that is the software I've been with the longest. I was an alpha tester back in the 90s, to a beta tester, to a full commercial release, to the point that Ameritrade purchased it, to the point that TD purchased it, to the point that Schwab purchased it. So it is an account where you can do all kinds of trading inside of one account. We can trade our Forex inside there, but we wouldn't be able to link it through API link to our Edge software. Now we are looking at a couple of different things to leverage and provide liquidity in a top-up styled environment. We're pushing for same as having a smaller pooling agreement coming into April is to have an agreement with a prop firm, an indirect agreement with a prop firm through an execution software firm that will allow us to do what we're wanting to do. I will give some more of the details on how we're going to go about doing that. Time frame is about the same. That should be in place by the end of March. All right. Who in here is confident that you understand most of the terminology of an options trade?
I've heard them all. I don't know what they are though.
Okay. Who in here feels comfortable that you can navigate your way around an options trade as far as the strike price, expiration date, contract size? Where is one of our options educational sites at?
Optionistics.
Optionistics. So if you use optionistics over the next week to 10 days, become familiar with the terms. We are going to be doing a few vertical spreads, which if you don't have approved inside of your options account, you will need to get a different level of approval to trade verticals. If you've already been through that process, fantastic, you're ready to go. But that's what you can use this next week to 10 days doing is the things to make sure you're ready to go. So when we're ready to go, you can trade right alongside us. So we'll go back into in February. That tier 3 is when we make our money, primarily gold fix money. Then when we come into tier 4, we'll take a look at the Magnificent Seven. We'll take a look at what profits did we come out of tier 3 with? What did that do to change the percentages, the insurance pool, and the amount of portfolio that we need to protect? So, today being as an example, today we have $17,000, about 17.5, that we need to protect. That's our new profit, 17,500. So how much of that are we going to immediately set aside?
10%.
10%, which would be in this case, if it's 17,500, 1,750. Right? So that's going to go into the insurance pool. Funds that we use. Did we just recently set a new high on gold?
Yes.
Yes, overnight. So we've got new strike prices we would be going to look at. So we mark those strike prices. We go out and look at the cost of those strike prices, and we go out into the future 6 to 8 weeks, usually no more than 12 into the future. We then would lock in a percentage to cover. Now, before last night, had we set a recent high?
Yes.
Take our gold trade, bring it out full screen. So ever since we were going sideways here in our little pedestal conversation that we had over here, when we broke through, we were setting new high, new high, new high, new high. We had just adjusted for the new high and we set a new high. So do I need a whole lot of new put contracts? And what would determine if I needed a whole lot of new put contracts? What are some of the variables?
The amount that you have for that, what that 10% value is, and
Okay.
how much you can buy with that 10%.
Okay. Did everybody understand that answer? So some of the variables would be, I've got new profit. How much new profit do I have? So what's the amount I'm trying to insure or protect, right? That amount has changed. Okay. When was the last time I went in and saw my insurance adjuster and I've already adjusted for the recent highs? It's been in the last week that I said I was trading down here, no longer trading down here, trading up here. for the first time ever. But if that had happened as recently as 6 to 8 weeks ago, I may have already had contracts up here from 6 to 8 weeks ago that are getting ready to expire. Which ones would I cash out first? The ones that I bought Monday? The ones I bought 6 to 8 weeks ago.
Six,
The
eight.
oldest ones.
The oldest ones are getting ready to expire. I don't want them to expire worthless. So let's go ahead and use those. If we take a dip, right? We're not going to take a dip that I'm concerned about over the weekend, right? So it would be the first of the week. If a Monday, Tuesday is a pullback and there's an opportunity to glean some out of those, I would glean some out of those. I don't have any up at this price because in this case, gold has never been up at this price. So I don't have any 6 to 8 weeks ago at this price. I don't have any last week at this price. But over the next 6 to 8 weeks, is it possible that gold is going somewhere above 5,000, 5,100, maybe even 5,250?
Yes.
Probable. Hmm.
Yeah. With the rally that we've currently got going, that is an extreme possibility, if not probability. We've been waiting for it. Is it also a possibility that we test through the 5,000 and give a quick pullback in profit taking?
Yes.
Very highly likely. Yeah.
Yeah, if you're a gold bug and you're retired and you're looking to pay a few things off, and somewhere in the back of your head you decided a long time ago, you know what? If gold ever hits $5,000 an ounce, I'm going to get rid of about half of what I got because that's a psychological number. We'll see it again at 10,000. That's a psychological number. People right now, if you were buying gold at today's prices and it goes to 10,000, it's doubled and it did it in the time frame you wanted to do, would you cash out?
Yes.
Some would, some won't. It depends on where you're at in your life and how it meshes in with what was your long-term goal. Who in here is your long-term goal? I won't be morbid, but your long-term goal is you want to die the wealthiest person in the graveyard.
No.
That's never been my goal.
Mm.
Now, I might want to share my wealth and pass it, 10% at a time off to my kids. If I really do believe that, okay, I've kind of looked at life this way and then made adjustments. I have sat and visited personally with over 100 people that are over 100 years old.
Mm.
So I never really thought as 100 years old as being super old. I definitely didn't think of 60 or 70 as being old, not in my generation. 100 years ago when people weren't living as long, sure. But now to not be able to make it to 70, you've made some bad life decisions. You've had some health challenges. You've had an accident. You had something that has prevented it. So I look at it like quarters. The first 25 years of my life were one way. The second 25 were another way. If I get another 25, I turn 59 in April. I will turn 59 in April. So I am planning what am I doing between 59 and 75 years old? Now, the closer I get to 75, just like the mortality tables, if I make it to 75, there's a higher percentage chance I'll make it to 100 because I've made changes in my health plan that if I don't make those changes, I won't make it to 75. But when you make it further, the chances are you'll make it further. That's the way mortality tables work. We learn from our past mistakes and things and corrections and medical marvels of today's world. I am going to go ahead and pick one more up on this bounce here. See if we get the bounce. So that gives me an out at 49.48.
Wow.
49.48. Might give it a 0.5. Get a multi in there. If we are still in a channel, that's going to cash out fairly quick. Let me click here, do a screen share, jump to the software. And cashed out. It's one of those where you're sitting around, you're talking. I'm not playing Skippo right now, I promise. But you're sitting around talking, and you look over and you see, you know what, it's still in a channel. And you just grab a trade. So in and out of the trade in 1 minute and 8 seconds for another $289. It's bringing us to 19.5 into the 17.5.
Yeah, I saw you taking those trades during pastime. Skippo.
Yep.
Just very quiet about it. Just
Yep. I just lean over,
arm over, yep.
click the button to buy, cancel the pending lower, set the target, do the multi 5 in case I need it, and just go right back. I could do it between, if there was 6 of us trading, if there were 6 of us playing Skippo, then by the time it got back around to me, it was at least, if everybody took a minute to trade or a play, I could want them to be traders. But by the time they come back around to me, many times I was already out of the trade.
Multitask.
Yep, just
And
multitasking.
watching me make sure I didn't put out a card that this champion.
That's right. So the 3 rules of Skippo, because we're going to be doing a grand champion, probably on a cruise ship. I'll bring the Skippo cards.
We got 3 of them.
So the 3 rules are you're going to draw, start your turn, discard, end your turn. Your whole turn is about playing your foot.
Oh,
A
that's it.
stack of cards that are sitting in front of you that you got to, that's your job is to eliminate them. You get to see the top one. And it has to be a 1 through 12 or a Skippo as a wild card. So the way I relate it to trading is I trade a grid. In the example of Skippo, if those cards are 1 through 12, am I ever expecting a 14 or a 15 to come up?
No, no.
Nope. It's outside of the realm of possibilities. So I have a range of 12, 1 through 12. That's the range. So in trading, I'm looking for a range. I'm looking for a range. And am I at the low end of the range or am I at the top end of the range? And everything I do while I'm trading is I'm seeing where is it in that range. I'm building to that number. In Skippo, I'm building to that number. So if a 7 is the top of my stack, my deck, I'm playing to 7. If I'm looking for this to run up or down the column to a 49.47, and I'm below that right now, but I think it's going back to 47, then I come in and buy again. Just somehow interpreted it as a double click of the button. Cancel the pending lower. We've got a stack here. I was expecting it to bounce up above 49.47 and continue up to, say, 49.50. So as soon as I'm in the trade, cancel the pending lower, take my adjustments, set my target, get my multi-5 ready. Then I'm looking at two things. I'm looking at the time and I'm looking at what's my next play. What's my next play? My next play is if I come up here and I cash out, does my target move? Does my target move? So what I mean by that is, if we come down here and I add a multi-5, I'm no longer building to the 49.47. I'm building to my new break-even number. So things change. Did you notice, Ms. Rena,
Yes.
when we were playing Skip-Bo, and there are the four different piles that you're building on in the middle of the table, and you think you have a plan. I know, yeah, I know where I'm going to put my 7. I know where I'm going to put my 7, and then somebody just before it gets to you
Yep.
plays a 7,
They sure do.
and now you're no longer building to 7. I mean, you're still building to 7. You're just not going to do it on that stack.
Nope. I
So
have
you
to
have to be
retract
able
off.
to adjust. One is being a mindful of your surrounding. It's being mindful of your surrounding. Have you heard me say that trading is 90% psychological?
Yes.
Did you experience when you were sitting around the table a little bit of psychological warfare?
Yes.
Did anybody on the executive team try to throw you off your best game?
No. Well, well.
Well, yeah, well, it was done in a fun way. It was
Right.
done in a fun way, but were they all there to win as well?
Yes, they didn't want me to be grand champion.
They didn't want you to be grand champion.
Nope.
And so, in the process of a little competitiveness, right?
Right.
So, the first game, did they let me help you as much as you needed help?
Yes, they did, and that's when I became the grand champion.
That's right. And so, it is don't do that. Don't play that. Don't play that. What do you need to do first? Check rule number 2. Check rule number 1. You forgot rule number 1.
Mhm.
So I could help you as much as I wanted. That second time we played, did
Okay.
they let me help you that much?
No.
Nope, you're on your own.
Yep.
Yep.
But I learned it.
So every time you come back in that friendly competition. So here, when you are trading, is there anyone out there on the other side of a computer halfway around the world that has any knowledge whatsoever of whether Rena is long or short?
No.
No. No, but you might be thinking, okay, it's going to go up, it's going to go up, it's going to go up, going to go, whoa, 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 what just happened? Right?
Yeah.
So psychologically, you have to be able to deal with the ups and downs of the market.
It's difficult.
It is difficult, but is it doable?
Yes.
It is doable. And so that's where I like accountability partners. In trading, I like accountability partners because we're able to go through the checks and balances. Did you check this? Did you check that? And you could get that. Does that need to be me?
Well, I don't know anybody else. I'd
Mike,
rather
she doesn't
be-
even know you. Mike, meet Rena. Rena, meet Mike.
Well, I can ask anybody here on the team, yes.
Okay.
I wouldn't go on Facebook and take anybody's advice.
Okay, there you go. But inside this group, do we have others that are becoming very knowledgeable about what it is I'm looking for?
Yes, very much.
Absolutely. Many of you relied upon Robin first, right?
Still,
Anybody that is also taking the lead now, did it start with you reached out to Robin at some point and asked her a question?
yes, I did.
Isn't that the pattern most of you have followed?
Yeah, definitely.
And Robin, didn't I tell you once upon a time? It is more likely that the student will come to you and ask you a question that they're afraid to bring to me in class.
Yes.
That's the tendency. Nobody wants to look silly or that was
Mhm.
Mike. I say nobody, nobody except Mike.
I'm willing.
He's willing, right? And he would ask a question. He'd get halfway into the question. He's like, I don't even know if this is a real question, you know, or I don't even know if I'm asking this right. But he would try. He would try to articulate what it was he was struggling with. Who agrees that Mike is much better at that now? He has failed his way forward.
Yes. Yes. I have a list of questions for Robin already.
There you go. There you go. And so, who agrees that that works well with the number of students we have in it right now? But if you increase the number of students, you need to increase the number of teachers' aides. Are you willing to be that person to the next person? Some will say yes, and some will say no. I didn't come here for that, didn't sign on for that.
If I can help anybody, I will, but I wouldn't trust me right now.
Well, you have to build to that though, don't you?
Yes.
You have to build to that.
Knowledge is power.
That's right. I think we've gone over it before, but the etymology of the word sophomore.
More like freshman.
So the etymology of the word software is actually based on a Greek word, Sophia. You are sophisticated, moron. You are a sophisticated moron, right? When you're a freshman, it's all new. You don't even know what you don't know. But by the time you become a sophomore, it's like, oh yeah, I'm not one of those punky little freshmen anymore. I'm now sophisticated,
Mhm.
but you're still a moron,
Yep.
right?
Yep.
When it comes to like senior postgraduate work, you're still working on something. You're still, but even when the time you get to a senior,
You're never finished.
you're never finished. You're a student your whole life. There was an individual that I was teaching, mentoring at IML, Adese Duncan. Adese Duncan comes from an educational background. She has her degree in education. And she was talking to me, and she came up her phrase, one of her shirts. She also did T-shirts or swag, and it said "Student Always." And so, just reminding people, no matter how long you've been trading, you are a student always. If I were not a student right now, and I'd given up as soon as the world was going to high frequency trading, well, I can't compete with the machine. If I'd just given up then, I'd already be retired. We wouldn't be talking. But I started studying the good and the bad of high frequency trading. Could you still distinguish a pattern? Could you still out trade the machine?
You could.
Now we're looking at AI. Same question. If I'm going to give up and say, well, there's no way to compete with AI, or I could say, is there any inefficiency in the AI bots that are currently out there? My conclusion, most of the AI bots that are out there are inaccurate. They're built on inaccurate information. They will never trade better than 60%. I trade better than 60%. So therefore, I can use the inefficiency of a bot, let the bot influence the high frequency algorithm and trade and let that high frequency algorithm make my trade. How do I do that? That I let the high frequency trading algorithm kick in. It creates the wave and then I ride it.
Hmm.
Right now, the high frequency trading wants to run up to a certain point and hold. That's the first and second push. It's going right up to it. That is the first and second push. That means I've got to look at the timer and say, where am I at on the 2.5 minutes? There's 2.5 minutes left on the time frame, so I got to pull back. It's pulling back right now. What's it doing? It's pulling back, profit take. It's profit take, profit take, profit take. So if it doesn't go more than halfway back into the candle, which is about right here. If it doesn't go halfway back into the candle, then the third push comes back after profit taking and gives a 1, 2, 3 punch and puts me through the line. The line is right at the point of profit. Now, there's two ways to go about that. I don't want to wait. I have reduced my profit target by 50 cents. I'm out. Or I give it that extra minute or two, and it does the 1, 2, 3 punch, and it's out. So this is simply learning how to read the algorithm or the high frequency trade and see if the volume is there. If the volume is there, hold the trade. If the volume is not, make the adjustment. If it does the deeper dive, add the 5, reduce then because my break even would be considerably lower. And I don't need it to go up to my profit target of 49.50 and 50 cents. All right, we've got 1 minute left. So this next 30 seconds is key. 1 minute left, last 30 seconds is key. That was the first jump. There's the second jump. And it cashed out.
Wow.
Who would like to read a wave as well as I read that wave?
Absolutely.
Everyone.
I think I'm getting there.
I think you're all getting there. We're all closer than we were.
Hmm.
I'm still learning new things. The more I sit and talk to people that know more about AI than I do, that know more about bot work and coding than I do, the more I learn. I teach them something as a trader, they teach me something as a coder, and I walk away with one gold nugget. I found at my age, with my background and my experience, that gold nugget, each time I get a new gold nugget, it's worth $1 million to me.
Bingo.
$1 million. That is $1 million nugget. I'll spend $25,000 on a seminar if they're going to give me a $1 million nugget.
I'll take a nugget.
Yeah, that's money well spent. All right, we are
Hey,
after the half hour.
We walked away with a gold nugget.
That's right. I pass it on, right? Learn, do, teach. So I learn it, I put it into practice just to make sure I learned it correctly. Then if it's profitable for me, I pass it on to you. All right. So we are going to go ahead and wrap up with that. It is a weekend. So keep an eye on your Telegram. Robin and I have a lot of work ahead of us for the weekend. It might be shoveling snow. I don't know. But we do have some work ahead of us. If you're going to be out in the weather, be careful out there. And we'll look forward to seeing you back in on Monday. So we're going to stop the screen share.